Good morning, everyone. Welcome to another episode of the Mizuho Week Ahead. I am Boon Heng, market economist at Mizuho Bank. This week's theme is Risk of Exhaustion. Recovery in risk sentiments show signs of exhaustion, with hopes of a deal to reopen the Strait of Hormuz facing significant impediments amid troubling details within the Iran-Oman agreement and a flare of conflicts in Yemen led by the Houthis. The prohibition of US and Israeli ships and demand for compensation by Iran should not be surprising, given that Iran will seek to rebuild their damaged economy and military. The trouble is that such details would imply a significant rebuke from the US, even though most American-owned ships are foreign-flagged due to convenience. Reflecting the hostilities, Iran has also showed a continued willingness to attack ships which they deem as hostile, as evidenced by their latest attack last week. For now, much of the initial relief from restraint and escalation could have been hinging on reports that the US weapons stockpile is facing the risk of exhaustion, though this has been refuted by US President Trump. That said, he has already pivoted to a strategy of prolonging Iran's economic pain rather than employing military means. The flip side of this, though, will be the perception of US ability to defend its ally as well as the ships that they were escorting. Regardless of the actual stockpile levels, perceptions matter, as skirmishes in the Middle East may be emboldened and confidence of the shipping industry strained. With the Houthis attacking the Yemen government troops, the risk of a wider conflict in the Middle East is far from being alleviated. Furthermore, temptations to dispel perceptions of exhausted stockpiles also imply latent risks of military escalation. Meanwhile, on the macro front, US ISM services displaying stagflation woes also appear to be increasingly exhausting the Fed's policy space. As such, the current slippage in USD yields may be at risk of exhaustion, as last Friday's dismal NFP print, which sent USD yields plunging, collide with soaring oil prices as both US and Iran raised demands for negotiations. In Asia, even as EM Asia FX saw gains last week, relief from low oil prices and USD yields appear to be increasingly exhausted and confined to twin deficit economies such as the peso and the rupiah. In the Philippines, a dismal Q2 GDP print at 2.3% year-on-year was driven by deteriorating consumption and further drag from government investments, dampening the odds of further BSP rate hike and softened peso gains. In Malaysia, lower USD yields did little for the ringgit, which faced domestic setbacks, for PM Anwar's coalition, which lost their state election in Negeri Sembilan, which was one of their strongholds. Looking ahead, the RBA is likely to stand pat at their meeting this week, as deteriorating housing market triggers worries of a broader economic spillovers. That said, the phased expiry of the fuel excise tax will imply that rate hikes will remain on the RBA's table. Crucially for the upcoming week, upcoming US CPI, which faces upside risks from fuel prices, will add further discomfort to EM Asia FX, tormented by the confluence of USD yields and a protracted Middle East conflict. All in, exhaustion risks permeate geopolitical conflicts, central bank policy space, Asia's fiscal space, and even AI rallies checked by fundraising realities. For more information, please refer to our Week Ahead publication or contact your respective sales desks and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.